I'm Corbett Wall with DV Auction, here with your cattle market summary for the week ending February the 3rd, where we saw a nice bounce late in the week after a lot of bearishness there early, all coming mostly from that very bearish cattle on feed report and those giant placements of 118% that came a week ago Friday. But and everything was down, and the fat deal was down, and the board and cash feeders especially, but we saw on Thursday and Friday things started coming back around, and we're going into this week really with our head up and a positive attitude. Look at the board last week, live cattle futures on the April contract. Monday was down 250, Tuesday down 65, Wednesday down 47, but Thursday back up $1.77, and then Friday finishing up the week up just 15 cents, but ending the week at 115.62, which was down just $1.70 after starting the week out down $2.50 on Monday. But your February spot fats are ended the week at 116.90, which is $2 and change back from what the board is, or from what your cash cattle market is. Feeder cattle on the March contract, Monday was down $3.55, Tuesday down $1.12, Wednesday down 70, but Thursday up $1.67, and then Friday down just 17 cents to end the week at 123.57, which is down $3.88 for the week. But remember, we started out on Monday down $3.55, so really a nice bounce back. Your April board, which everybody's going to be moving to if they haven't already, ended the week at 123.50. But if you look down the line, your board for yearling feeder cattle, which is what your feeder cattle contract is, based now on an 800-pound steer, is virtually the same price, just within pennies, all the way through the summer. Yet you see these guys competing for stocker cattle here in early February and kind of blowing their brains out on these 500-pound steers. And they're really overstepping their bounds, hoping for good things to come, but we just don't have enough evidence that things are going to get that much better. And if you're given, nearly what those cattle are worth a head by the time they're going to come off grass, you're just beating your head against the wall. And you got to try to find some cattle that are got some value to them, but get off some of those big prices too. But your fat cattle last week on 76,300 head in the 5-area feeding region through Thursday, and not really anything Friday, so probably not going to hit 80,000 negotiated trade for last week. But by and large, your live price was $119, which is $1 to $3 lower. Dress price at $190, $3 to $4 lower. Box beef cutout values kind of held their own last week, with choice carcasses at $192.88 on the average trade for the week, which was up 79 cents from the week before. Your select carcass at $189.85 for your average trade for last week, which was up $1.28. But on the late trades of the week on Friday, choice was down less than that in the 191 to 2 range there, and select was up just a pinch, really narrowing that spread to less than $1.50. And you think, 3 out of 4 steers and heifers now grade choice or better, so we're a little bit light on the select side, and you need select product. A lot of these grocery stores have, that's what they're based on, is select product, and nothing really wrong with select product, especially when people are wanting a lot of lean meat. It's not going to give you that delicious juicy flavor that we all want, but it is leaner. But you look at your slaughter for last week, it was better than expected, 593,000, pushing 600,000, and we're getting to the time of year where we're usually in a lull where we don't have a big heavy change speed, but 593,000 was 16,000 better than the previous week and 58,000 more than the same week a year ago. And actually our slaughter is up almost 1.5%, and last week we had a huge harvest there. So we're doing things like we should, and we've got really good demand. I think we're losing that. Consumer demand for beef products is outstanding, and we've got a lot of demand export demand too. But you know, we're shaking some things up getting in this new Trump administration. But I think for the most part, your cattle people are really optimistic about the long term for our exports, and they're not worried too much about some of these deals, you know, like NCBA, and some of them are really wanting TPP, but we think you look at the whole picture, it's really better that we bowed out of that. And I think down the road in the long run, most of us believe that it's going to be better with the Trump administration for our ag exports. But you look at your feeder cattle prices for last week on a weekly trend, feeders were $4 to $7 lower. Straight through. Your calves weak to $8 lower, but you know, really a flat 500-pound steer, weaned, solid colored, hard 500-pound steer was steady just about everywhere. That's what everybody wants. They're already buying. It's funny to call them stocker cattle when we're in February, and from I-70 north, it pretty much looks like a glacier everywhere. But we're buying stocker cattle right now. But you look at your real-time index on Beef Market Central, which tracks the 800-pound steer just like CME index does, but at least a whole day faster and a day and a weekend faster when it falls on late in the weekend. But real-time index ended through the weekend 125.88. So your CME index actually through last Thursday sitting at 128.19. That heavily influenced by those northern sales, because that's where they get the big bunches. It's just human nature for those market reporters on a down market to downgrade cattle, which kicks them out of the index, to not put as many small groups in and individuals, where your real-time index on Beef Market Central pulls all the data and doesn't have a conscience or any problems with the down market. It just quotes what's actually there. But our inventory come in last week, and on cattle and calf inventory as of first of the year, and it was up, but that's not a bearish thing because we're expecting it to be that way. But 93.6 million head of cattle and calves, up 2%. Calf crop was up 3%, so we knew that was growing, but we're already seeing signs that people are not keeping heifers back now, so it'll be dropping down here in the next 2 or 3 years. But your trends on your feeder cattle rebounded some late in the week. Like I say, compared to the previous sale, they weren't as much lower as they were earlier in the week. But we saw some weak prices there at the end of the previous week. So actually your market didn't really change that much. But you look late in the week at a big sale, and really a top quality premium type sale there in Lexington, Nebraska. Their quotes were actually higher. It's about the only higher sale that we had. But they sold a lot of cattle higher, as much as $4 or $5 higher on feeding type cattle. But you know, we've been talking the last couple of weeks about trying to hold an 8-weight steer in the 30s, in the 130s on a load lot deal, and both your CME index and your real-time index are well below 130 on an 800-pound steer. Here's a big 2 giant loads, 128 head of 905-pound steers that can read and write in Lexington, Nebraska, 3:30 on Friday at 137.50. So that was a big bounce back in late in the week in Lexington. But here back home at my home office for DV Auction here in Canyon, Texas, and we'll talk to you on Wednesday.